Hello everybody, Randy Patrick here. Welcome to Housing Bubble 2.0 News of the Week, or as I like to call it, another episode of As the Housing Market Turns. And again, it turns and turns, and lots of conflicting information out there these days, so we'll delve into it right now. So the first thing I want to talk about is really interesting, at least I find interesting. So ATTOM Data Solutions, they released their October 2019 U.S. Foreclosure Activity Report. And if you take a look at this, it basically noted that foreclosure starts increased monthly in 36 states. That's 72% of the states had a month-over-month increase in foreclosure starts. It's up 17% from the previous month, but down 1% from a year-over-year. And it's the first double-digit month-over-month increase since February 2018. So again, just want to point that out that, sometimes these foreclosure filings are, there's a little bit of seasonality into them, and that's part of their commentary on this article right now. But realize that, we had maybe 30% of the states and 44%. Well, now we've got 72%. So regardless whether there's seasonality or not, I think we're seeing a pretty steady increase in foreclosure filings every month, every couple months right now. So just something to note, and that's more opportunity for us. When you take a look at the information, what I'd like to note is that states with the highest foreclosure rates, and that's per capita, like one house and how many housing units, still are New Jersey, and Illinois comes in number 2, Maryland, South Carolina, and Florida. So the top 5 are pretty, I guess you could call it pretty static. Those top 5 rarely change as far as the per capita foreclosure rates that are going on right now. If you take a look at the 10 major metros increase in foreclosure starts in October 2019, and there's a graph here. I will put this on the community tab so you can take a look at it, or you can go to ATTOM Data Solutions site if you want. So basically the top 10 major metros that increased were the Sacramento, Roseville area of California with 42%, Nashville, Davidson, Murfreesboro, Franklin, Tennessee at 45%, Detroit and Dearborn, Michigan at 48%, Phoenix, Mesa, and Scottsdale, Arizona at 51%, Orlando, Kissimmee, and Sanford, Florida at 56%, Rochester, New York, 64%, Portland, Vancouver, Hillsboro, Oregon, and Washington at 68%, and we got Miami, Fort Lauderdale, West Palm at 109%. We have Cincinnati, Ohio at 111%. And believe it or not, we have Minneapolis, St. Paul, Bloomington, Minnesota at 189%. So I can tell you that, in some of these locations, maybe it's a little bit skewed because if you have a lower amount of foreclosures the previous month, and obviously if there's a larger filing month, the percentages will increase. But for places like Florida and other locations, they're always getting significant amount of foreclosures monthly. So an increase is a significant increase. So I would look at Minneapolis and maybe take that with a little bit of grain of salt. But the point though is that we're starting to we're starting to see other locations now that are popping up in the foreclosure filings, which is very interesting. When you take a look at why people fall into foreclosure, well, they're not paying their mortgage, obviously, and it's not because of silly mortgages or things like that happened back in the last housing crisis. Typically, people are falling into foreclosure because of wage loss or job loss. They can't make ends meet. Maybe you had 2 incomes that you required to purchase a house and one fell off, or there's reduction in hours. There's the typical, death, divorce, illness, relocation, other things that are going on. But realize that typically it's people losing their job, or they're not making enough money like they used to back when they qualified for the loan. So again, just interesting to note that we're seeing increases in foreclosure filings. And again, it's not 20% or 30 or even 40% of the states. It's this month in October, 72% of the states. That's what I say, it was 36 out of the 50 states basically increased in foreclosure filings, which I think is quite notable. Okay, other news here. Housing starts permits rebound in October despite slump in buying climate. So after last month's surprising plunge in both housing starts and permits, expectations for a rebound were slow in the collapse, and they did. So housing starts disappointed, rising 3.8% month over month against a 5.1% expected. So housing starts, even though they came up a little bit, it wasn't as expected. And building permits beat expectations of a 0.5% decline, surging 5% month over month against an upwardly revised 2.4% drop in September. So there you go. So new housing, starts and permits went up a little bit. And basically, it says, oddly enough, housing starts continue to hold up despite a collapse in home buying attitudes. So, it's funny because you take a look at different studies and different surveys and reports that are out there. There seems to be less and less people who are looking at new homes. So which is it? It's the home. Do we follow home builder sentiment, or do we follow the American buyer sentiment? Because home builder sentiment always seems to be strong from the National Association of Home Builders, but sometimes we don't see that in the numbers as they come out. So anyway, that's interesting news. California median home price jumped 6% in October. So median price for a single-family home in California jumped 6% in October from a year earlier. The state's median home price was $605,000 and change, according to CAR, which is the California Association of Realtors. And they said California home sales rose 1.9% compared against October 2018. So a slight uptick in sales activity and obviously a 6% uptick in median sales price. So the comment though was latest surge in home price is the consequence of an ongoing mismatch between supply and demand, said CAR's chief economist. While low interest rates will reduce borrowing costs for buyers and temporarily alleviate affordability concerns at the micro level, without an increase in housing supply, including new housing construction for sale or for rent, fundamental issues remain at the macro level, which will worsen the affordability crisis down the road. So I got to say, this really is a great statement from the chief economist at CAR, and I think it's a good statement, basically saying, yeah, we saw a little uptick, but hey, let's not jump on the bandwagon here. Let's not get your hopes up, because we're still seeing more problems with lack of growth in home building, lack of affordability, and these issues are only going to get worse. I said, which will worsen the affordability crisis down the road. So basically, the supply of homes, measured as the amount of time it would take to sell off existing stock, shrank to 3 months. So from 3.6 months from both September and October from both September 2019 and October 2018. So basically, we saw a decrease from a month over month and a year-over-year decrease in inventory that's available right now. So there you go. The cheapest area of the state that saw the biggest jump in home prices was the Central Valley, and it had a median price of $345,000, a jump of 7.8% from a year earlier. San Francisco, the most expensive region, had a median price of $940,000, a drop of 2% from a year ago. LA metro area was up 5.6%, and again, the Inland Empire, which I mentioned, up 5.8% from a year ago. So there you go. All right, national home bidding war rate collapses to a decade low. So a new Redfin report specifies that only 10% of all the offers written by Redfin agents on behalf of their home buying clients faced a bidding war in October, down from 39% from the same time last year, and is now at a 10-year low. So not even a plunge in mortgage rates this year could attract new buyers. So this is interesting, which goes to show that there is less competition for properties out there. Now realize that this is Redfin's report, and these are based on Redfin agents placing offers for their buyers that are clients. And they're only going to survey Redfin areas. So Redfin's not across the country. Redfins are in a number of metros like San Fran, San Jose, San Diego, Philadelphia, Los Angeles, Phoenix, Raleigh, Boston, Washington, Houston, Seattle, Sacramento, Portland, New York, Austin, Dallas, and Denver. There's your Redfin sample areas which they participate in, and definitely the difference is quite staggering. So we're seeing a big drop off. So again, the average is about 10%, which is certainly different from being in the almost 40% from this time last year. So what does this mean? Well, I guess you could suggest that the Redfin report is a warning that homeowners are beginning to recognize a possible housing market top. So, that's interesting. No one wants to pay top dollar anymore. I know when you read these statements, it seems to be after the fact. We recognize that we're at the top. Do the normal average everyday home buyer recognize this? I do not know. Who knows what they think or what their thoughts are. But obviously for us who are following this on a daily basis, we know that we're at the top and we're peaking and we're cresting right now. But, again, these are little signs that sort of show that the general public is tired and exhausted and not really interested in paying top dollar and buying people's equity that they think they've gained over the past few years and buying their equity essentially. So they want material discounts, as we always say, and better price points and more concessions, things like that. Now, there's a couple blogs that I follow, and I just wanted to just quickly go over some headlines here. Not too in depth of the information, but here's something. A report from KOMO News in Washington State: sale prices for new homes fell 12.1% year over year in the Seattle metro area in the third quarter. The report also found the price per square foot for new homes fell 7.1% year over year. There was also a significant year over year increase in the number of residential building permits. So whatever that means. So more things are being built. So if there's more competition in that area for new homes, you're obviously going to see price wars and some declines, which are good there. And where else? We've got from the Midland Reporter Telegram in Texas, virtually all categories from September showed a better housing market in Midland County for the buyer, according to Texas A&M Real Estate Center. Number of homes sold was 220, down 50 over month to month and down 30 over year to year. The average price for a home sold was down by nearly $27,000 month over month and down by more than $31,000 year over year. So also the median price was below $300,000 for the first time since February. So again, interesting that we see that different parts of the country, they're seeing how the housing affects them. And, again, it just shows that stuff is starting to sit in the market longer, and there's got to be some discounts for buyers to jump on. All right, interesting, the Manhattan apartments. So clearly when you go into the Manhattan part of New York City, obviously a lot of people live in the apartments there. This says the average sales price for Manhattan apartments fell 22% in the third quarter of this year compared to the same period in 2018, the steepest decline since 2008 financial crisis. So we see, again, different locations. I mean, obviously a lot of higher end properties in Manhattan, in the New York City area, fell 22%. That's the biggest decline since the last housing bust. So there you go. So I like reading stuff like that. This I also find interesting as well too. Home Depot shares plunge most since 2008 after slashing sales outlook. So the Home Depot shares slumped more than 7% in pre-market trade, putting shares on track for their worst daily drop since 2008, after the company slashed its full-year sales guidance on Tuesday. The company also posted Q3 sales that slightly missed expectations. Why do I find this interesting? Well, this is what happens. So more on the investor side, but also in the home improvement side of the marketplace. So if you live in a house and you take out a home equity line of credit with the idea of home improvement, okay, there's less people who are obviously buying supplies and buying stuff at Home Depot. If you're rehabbing property or investing in property, whatever you do, a lot of times you're going to Home Depot and Lowe's, other hardware stores for supplies and things. You'll do it yourself, things like that. Also, they both have, Lowe's and Home Depot both have contractor divisions as well too, where they're selling to other contractors at different price points. So if the Home Depot sales are falling, I would assume that I would believe that Lowe's would be falling as well too. And apparently Lowe's Lowe's results are coming out tomorrow, which is Wednesday. Oh, and by the day, I forgot to mention today is Tuesday. I believe it's the 19th of November. So there you go, guys. Interesting. The Home Depot CEO stated that continued lumber deflation for the lower sales forecast. The company also blamed potential tariff impact for its lower full-year revenue guidance. And also, again, I look at it going, well, if it's price points that are tough, price points, sure. Higher priced, I guess you could say, steel, supplies, lumber, whatever, also makes it difficult for rehabbers and investors to engage. So there's going to be some pullback there. It's funny that with so many traders worried about a possible pullback in the U.S. economy, signs of weaknesses at retailers like Home Depot, long a standout in a troubled sector will entice analysts to take a closer look and obviously make some comments. So, but what happens? All these publicly traded companies, what they'll do is they'll revise their current earnings expectations for the quarter, and then they'll revise their future expectations. Which, when they do that, that's where stock traders and the public, people who have the stocks get kind of scared and they pull back, or share prices drop and trading slows down, etc. So I just find that's interesting to note, because we know that a lot of times, it's been proven that lumber pricing before the last housing crisis, we had lumber pricing hit an all-time high, and that was just one of the extra signs that everyone's looking at right now, like a Home Depot here. Where are they at? If we see sales slowing, maybe the thought is there's a cooling off of activity in the home improvement, rehabbing, ultimately home buying sector, so to speak. So there you go. So that's it for today's news. Wasn't too long in particular, but I wanted to touch base on the foreclosure stats. So to recap, foreclosure filings are up for the month of October. That's a 72% increase from the previous month, even though it's down slightly from the year before. What can I say about that? There is still a divergence with respect to housing prices and wages. More people are receiving a foreclosure filing now. Yes, there will always be some seasonality into the months. The comment here was, well, maybe the lenders and everybody are doing a lot of filings in October because things tend to slow down in November. I don't normally see that happening. From my perspective and how I look at the foreclosure information in my area, it typically, it just goes. Yeah, there's a few months throughout the year that maybe will have bigger increases, but it's pretty steady as far as activity. So that's on foreclosure filings. Where sometimes things do change is foreclosure sale, like an auction sales / repossessions. I do know that oftentimes Fannie Mae, Freddie Mac, like the government, the GSEs, the government-sponsored entities, what they will do is if there's foreclosure sales scheduled over the Christmas holiday time frame, sometimes they will push those sales off. So occasionally people get a little free pass for a couple extra weeks, so you're not disrupting people's lives literally during the week of Christmas and New Year's, but they pick up right away in the new year again. So that's the only time I'm aware when there is I guess you could say, a concentrated effort in actually doing that. And again, that's not with every lender. That's just basically the loans that are backed by Fannie, Freddie, VA, the government-sponsored entity, so to speak. So keep that in mind. So anyway, guys, thank you for the views as always. Thank you for the likes and your comments. If you'd like more information about the housing market, want to talk about home purchases, would like to learn more about investing, please hit me up. You see that my email's been popping up on the screen periodically here. I also have a report. It's called, if you go to housingbubble2.com, you can download a free report on the 50 worst places, the 50 places across the country that a housing bubble is primed for, and also my sort of information on short sales, why they're a great opportunity for everybody right now. And so please contact me, reach out if you'd like more information on that, investing, particularly in the pre-foreclosure short sale market. I can tell you that, on a personal note, I've really amped up the marketing and trying to get a hold of these opportunities out there, and doing some very interesting things right now. So if you want to discuss that, want to learn about it, drop me a line, send me an email. Always please put your phone number in there. If I don't get back to you right away, you can hit me up again. The squeaky wheel gets obviously the oil, so certainly whatever, email me multiple times if you have to. I do apologize, sometimes you get really busy and stuff, but if I don't respond, not because I'm ignoring you, just because I forget and I've got a lot of things happen at once. So but don't worry, there's lots out there for everybody, and I think this is a great opportunity if you want to get involved. So once again, thanks very much, and we'll look forward to speaking with you before the week's end.